All right. Happy New Year, everybody. Thank you so much for joining us today. I'm Lisa Partida with Home Again LA. And today we have Alberto Tapia with Universal City Studios Credit Union. And today's topic is going to be insurance and risk management. So I'll go ahead and pass it along to Alberto.
Great. Thank you, Lisa. And welcome again, and also Happy New Year. Thank you again for starting out 2026 and just being here, for taking time to invest in yourselves and your financial well-being. So today's workshop is about insurance and risk management. But most importantly, it's about protection. So this will be protection for your income, your health, and your ability to recover when life throws something unexpected your way. A lot of people hear the word insurance and think it's confusing, it's expensive, or only for people who already have money. That's not true. Insurance is a tool meant to help prevent emergencies from turning into long-term financial hardship. This is a judgment-free space. Everyone here is in a different place financially, and that's okay. The goal today isn't to tell you what you should have, it's to help you understand your options so you can make informed decisions when opportunities come up. Oops. Why? Okay. We'll talk about different types of insurance, how they work, and how they fit into real life, especially when money is tight or unpredictable. You don't need prior knowledge, and there are no bad questions. By the end of today, my hope is that you leave with a clearer understanding of how insurance can support your financial stability and help you move forward with more confidence. So during today's workshop, we'll be taking a look at what insurance is and why it matters. We'll be discussing insurances such as health, disability in the sense of income and debt protection, auto, renters, home, and life insurance. We'll also be evaluating your coverage needs and showing you how to manage financial risk and the impacts of this in your income, debt, and emergencies. So before going any further, let's get right into our first big question. What is insurance? At its core, insurance is a financial tool that helps protect you from major financial loss by sharing risk with an insurance company in exchange for a regular payment, your quote unquote premium. It helps cover costs from things like medical care, accidents, or damage that could otherwise create debt or financial hardship. For example, instead of paying thousands of dollars after an accident or an illness, insurance helps cover most of that cost so you can stay financially stable. Insurance shifts financial risk from you to the insurance company in exchange for a premium. You're not paying for nothing to happen. You're paying for financial protection. Now, why insurance? Insurance helps protect what little or much you already have. That could be your paycheck, could be your car, your belongings, or your ability to keep moving forward financially. When something unexpected happens, insurance steps in so one event doesn't wipe everything out. Most people don't go into debt because they're irresponsible. They go into debt because of emergencies, medical bills, accidents, or damage can be overwhelming. Insurance helps cover those costs so you don't have to rely on high interest loans, on your credit cards, or the payday lenders. Financial stability isn't about being rich. It's about being able to recover when life happens. Insurance helps you stay on your feet after a setback instead of starting all over each time something goes wrong. Some types of insurance aren't optional. Auto insurance is required by law in most states. Lenders usually require insurance for cars, homes, or even rentals. This protects both you and anyone lending you money. So when we talk about insurance today, we're not talking about luxury. We're talking about protection, stability, and keeping small problems from becoming lifelong financial setbacks. Okay, so insurance terms, boring, I know, but it's important we know what all this lingo means. So first is the word premium. A premium is the amount you pay to keep your insurance active. Think of it like a membership fee. You pay a small amount or an amount regularly so the insurance is there when you need it, even if you never use it. Next is the deductible. The deductible is the amount you pay first when something happens. After you pay that amount, the insurance helps cover the rest. Choosing a higher deductible usually means a lower monthly payment, but it also means more out-of-pocket costs during an emergency. And the coverage limit. This is a cap on how much the insurance company will pay. Once that limit is reached, you're responsible for anything beyond it. That's why it's important to make sure your coverage is high enough to truly protect you. A claim is how you ask the insurance company to help pay for a loss. You file a claim after something covered happens, like an accident, illness, or damage. And finally, a quick reality check. Insurance doesn't pay for everything, but it can protect you from the kind of costs that would otherwise cause long-term financial harm. And that's right. It does get just a quite bit more difficult. There is more than one type of insurance, but let's dive in. The first one, health insurance. Health insurance helps pay for medical care when you're sick or injured. That includes doctor visits, prescriptions, hospital stays, mental health services, and preventative care like checkups and vaccines. Without insurance, even basic care can become more expensive very quickly. Is health insurance critical? Absolutely. Medical debt is one of the biggest reasons people struggle financially. One emergency room visit or a short hospital stay can cost thousands or even tens of thousands of dollars. Health insurance helps prevent a health issue from turning into a long-term financial crisis. All right, so we're paying monthly for it. Now, how can it be used? Using preventative care is usually free. Most plans cover things like annual checkups, screenings, and vaccines at no cost. Using preventative care can catch problems early and help avoid bigger medical issues later. So, what's in and what's out? Doctors and hospitals that are in network cost you much less. Going out of network can mean much higher bills. When possible, ask ahead of time if your provider or a provider is in network. Now, choosing a deductible, a lower monthly payment often comes with a higher deductible. The key question is, if something happened tomorrow, could you afford to pay that deductible? The best plan is one that works in real life, not just on paper or for your credit union account. Overall, health insurance isn't about planning for something bad to happen. It's about making sure your health doesn't cost you your financial future. Next is disability insurance in the sense of income protection. So what does this do? Well, disability insurance helps replace part of your income if you get sick or injured and can't work for a period of time. It doesn't mean a permanent disability. It can be something temporary that still prevents you from earning a paycheck. Disability insurance is quite often overlooked. Most people think about insuring things like cars or phones before we think about insuring our income. But our income is what pays for everything else. Statistically, it's more likely that someone will experience a work limiting illness or injury during their working years than pass away early. Now, how to think about disability coverage? Check if your employer offers short term or long term disability. Some jobs include disability coverage automatically and at no cost to you, but many people don't know they have it. If you're working, it's worth asking what's available. You also need to understand how much income is replaced and for how long. Disability insurance usually replaces only part of your income, often 50 to 70%, and only for a set period of time. Knowing these details helps you plan realistically. Insurance helps, but it doesn't cover everything right away. Emergency savings help bridge the gap while benefits start or when coverage ends. Together, they create stronger protection. Now, for your reality check here, if your income stopped tomorrow, even temporarily, what would happen? Disability insurance is about protecting your ability to survive financially while you heal. Next is auto insurance. I think this may be the one we're all mostly familiar with. Auto insurance helps pay for damage to vehicles, medical injuries, and legal responsibility if you're involved in an accident. For many people, a car is more than transportation. It's access to work, appointments, and stability. Insurance helps protect that. Now, what are the types of coverages? Well, first, liability. Liability insurance pays for damage or injuries you cause to other people. This is usually required by law. It does not pay to fix your own car. It protects you from large bills or even lawsuits. Two, collision. Collision insurance helps you pay to repair or replace your car if you're in an accident, regardless of who is at fault. Three is comprehensive. This covers things that aren't crashes. Think of things like theft, vandalism, fire, or damage from weather. This can be especially important if your car is parked on the street or in public areas. And oh no, now you have to choose coverage. This has to be done wisely. You need to carry enough liability coverage to protect your assets. If you cause a serious accident, costs can go far beyond the legal minimum. Enough liability coverage helps protect your money, wages, and future income. And remember, higher deductibles equals lower premiums. Choosing a higher deductible does lower your monthly payment, but it means you'll pay more out of pocket after an accident. Choose a deductible you could realistically afford in an emergency. Now, minimum coverage. Sure, you got what the state legally requires, so what? Is that not enough? Well, minimum coverage keeps you legal, but it may not truly protect you. If you can afford a little bit more coverage, it can make a big difference financially after an accident. And overall, auto insurance isn't just about following the law. It's about protecting your ability to keep working and quite literally moving forward. Now, renter's insurance. This one is especially close to me. I'm still a renter myself, and I could not stress this insurance enough. So, really, what is its purpose? Renter's insurance protects your personal belongings and also provides liability coverage if someone gets hurt where you live. Even if you don't own a home, the things you own still matter, and replacing them can be expensive. Meh, do I really need it? Yes, it's important to have renter's insurance. A common misunderstanding is thinking that the landlord's insurance covers your belongings. It doesn't. The landlord's insurance only covers the building. Renter's insurance is what protects your stuff. This insurance is also one of the most affordable types of insurance, often costing less per month than your Netflix subscription, which is what now, like in the $30 range. But anyway, renter's insurance can protect thousands of dollars worth of belongings. If your belongings are stolen, damaged by fire, or ruined by water, renter's insurance can help replace them. If a guest gets hurt and you're found responsible, renter's insurance can help cover medical or legal costs. And trust me, even within your family, this could result in problems, legal problems. Now, temporary housing after covered losses. If something happens and you can't stay where you live, renter's insurance may help cover temporary housing or living expenses. Getting the most value out of renter's insurance. A tip is to create a simple inventory of your belongings. You don't need anything fancy. Photos on your phone and a short list of what you own can make a huge difference if you ever need to file a claim. Now, for this one, the reality check is renter's insurance is about protecting stability, not just your stuff. It helps you recover faster when something unexpected happens. Now, homeowner's insurance, future me is going to be glad I listened during this slide. So now, what does it do? Homeowner's insurance protects the structure of your home, your personal belongings inside it, and also provides liability coverage if someone is injured on your property. It's designed to protect one of the largest financial investments most people ever make. Now, chances are the home was not paid in cash, so you have a loan on it. When you buy a home with a loan, the home is used as collateral. That means the lender requires insurance to protect the property in case something happens. This protects the lender, but it also protects you from losing everything financially after a disaster. Now, the lenders also review what kind of coverage you have and what limits and what exactly is in your policy. If you don't have any type of homeowner's insurance or the limits aren't up to par to what the contract asks for, that lender can install their own insurance. They're going to add it to your balance. You're going to pay for it out of pocket, and it's only going to protect the actual loan. So that one's very important to have. Now, some tips. Coverage. You should review coverage annually as home values and construction costs change. Coverage should be reviewed to make sure it's still enough to rebuild or repair your home if needed. Understand exclusions. Some major events, like floods or earthquakes, are often not included in standard policies and may require separate insurance. It's important to know what isn't covered, especially if you live here in California where we're prone to fires and earthquakes. So insurance should cover what it would cost to rebuild your home today, not what you originally paid for. Replacement costs can increase over time. And overall, even if home ownership isn't part of your life right now, understanding this type of insurance helps you plan for the future and avoid surprises if or when you get there. Life insurance. Okay, but I'm alive. What is and what do I need life insurance? Well, exactly. You're alive now. Life insurance provides financial support to people who depend on you if you pass away. It's not about expecting something bad to happen. It's about making sure your loved ones aren't left with a financial hardship during during an already difficult time. Literally, everyone needs it. Life insurance is important if someone relies on your income, or if you share debt with someone, or if you want to make sure expenses like rent, funeral costs, or outstanding loans don't fall onto others. And of course, there's types of life insurances. Term life is usually the most affordable option. It covers you for a specific term or period. Think of like 10, 20, or 30 years. And this one is designed to protect people during their working and family building years. Whole life insurance lasts your entire life and includes a savings component, but it's much more expensive. For most people, it's not necessary unless they have a specific long-term financial goals and can afford the higher cost. Now for some tips. Term life is usually sufficient for most families. For many people, term life provides the protection they need at a price they can afford. Coverage should replace income, pay debts, and support dependents. Life insurance should help cover things like lost income, shared debts, and basic living expenses for those left behind. And the beneficiary is the person who receives the money. It's important to keep this updated, especially after life changes like relationships, children, or changes in the family structure. So, life insurance isn't about wealth, it's about responsibility, care, and protection for the people you love. Now, for some summary and your key takeaways. Think of these questions when evaluating your needs. What income would be hardest to replace? What assets would be difficult to recover? Who depends on you financially? And what risks would cause the most harm? Remember, insurance isn't about covering everything. It's about protecting what you can't afford to lose. Start with your income, then your essentials, then anything others depend on you for. Remember to continue managing your financial risk. Emergency savings reduce reliance on debt. Insurance and a savings fund work best together. Manage your debt carefully and review coverage after life changes or events. Insurance is one tool, not the whole plan. Emergency savings, manageable debt, and reviewing your coverage when life changes all work together to reduce financial stress. And of course, we all make mistakes. Here are some common mistakes we make with different insurances. Being underinsured to save money short term, not understanding deductibles or exclusions, letting policies lapse or expire, or never reviewing your coverage. Most insurance problems happen because people didn't have the right coverage, not because they did something wrong. Understanding your policy and reviewing it occasionally makes a big difference. And now to wrap it up, insurance protects stability, not just stuff. Income protection comes first. Insurance prevents long-term debt, and preparedness is financial wellness. And financial wellness isn't about avoiding problems. It's about being prepared for them. Insurance helps keep a setback from becoming a permanent financial crisis. The goal isn't perfection, it's protection. Now, I hope you have a better understanding of what insurances are, how it can impact you, and ways to strategically and responsibly manage them. We also want you to know that we partner with a national nonprofit called GreenPath Financial Wellness to provide free credit counseling to you. GreenPath's goal is to empower people to lead financially healthy lives, and we recognize that looks different for everyone. We invite you to take advantage of a free counseling session with a GreenPath Financial Wellness expert to discuss your unique financial situation and goals, which could include reviewing or building a spending plan, reviewing your credit report, and talking about your credit history in more specific detail. You can also discuss student loan options or explore options for dealing with debt and any housing concern or goals you may have. Please visit our website to learn more about GreenPath or call that phone number on the screen to talk with a caring, certified financial wellness expert. And that concludes the presentation for today. Thank you.